welcome to the Healthy, Wealthy, and Smart podcast. I'm your host, Karen Litzy, and today we are recording a podcast and we are live on Facebook because this is a topic that's really, really important to a lot of people. We are talking about student loans. So, as a healthcare provider, as physical therapists, we know that student loans can be a big, big hurdle for a lot of people to get past in their career. So I'm really happy to welcome back to the podcast for I don't know how many times, Joe, you've been on, but it's been a lot because you always have great stuff to talk about. So I'm really happy to have on the podcast Joseph Reinke. So he is a CFA charter holder, the founder of FitBux, adjunct professor at 15 universities, and basically a financial expert. So, Joe, welcome back to the podcast. I'm so happy to have you here to talk about student loans. We're getting to the end of the year here. We're in December. People are looking at their budgets for next year. They're calculating how much of their student loans did they pay this year and what happens next year. So thanks for coming on to shed a little light and give us some of the updates on student loans.
Yeah, thanks for having me. That was funny. You just said that part about the adjunct professor part. Never, the last time we spoke, if you asked me if I was going to be an adjunct professor anywhere, I would definitely have said no. So, that's relatively a new thing, and so it still sounds weird to hear. But thanks for having me. Looking forward to talking about student loans, financial planning in general, financial management in general, and how it all sinks in together, and yeah, go from there.
Yeah. And there is a lot to talk about here. So let's first, if you can touch on student loans in general, because there are a lot of places where people get student loans. So before we get into the updates and what's going to happen in 2025, could you give a little breakdown about what student loans are, where people get them from? I'll
Yeah.
hand it over to you.
Yeah, absolutely. And I'll go through like a little bit back history on this because it helps explain where we're at today. So, going into the mid 90s, late 90s, the only federal loans you can get were just regular standard loans. So you just got them and you repaid them. What we typically think about in like an auto loan or a mortgage or anything like that, like that's a personal loan, that's what it was. And this wave came over of this things called income share agreements. They started gaining some traction. They use them overseas in Australia, I believe it is. And so President Clinton decided to do something that was similar. It wasn't full income share agreement, but it was like they call it income contingent repayment, where it was a loan, but the repayment was based as a percentage of your income. And so President Clinton rolled out that first one in the late 90s. And then President Bush rolled out a new one called IBR, income-based repayment. And the primary difference between those was that IBR was passed by Congress. ICR was not. It was done by, I don't even know what the legal law is, but it was done through some Department of Education law thing that they go through. Um, Long story short, in '08 or '09, when President Obama became president, basically it was one of those things where it was like, we are taking over the student loan industry. So when President Bush left office, it was about 50-50 federal and private loans. Now it's like 94% federal loans. At the same time, right before President Bush left office, there was public service loan forgiveness. That basically says if you work at a nonprofit and you're on one of those income-based repayment plans, you can qualify for forgiveness at 10 years.
Mhm.
So the big thing on that was that it was understanding that you would be on those plans for 20 or 25 years, and then your loans were forgiven, and then you would have to pay a tax on it. Okay, once it's forgiven. With PSLF, there's no tax, so that's the main difference. So I believe it was in 2014 or 2012 or 2013, somewhere in that range. President Obama didn't like the old IBR plans because they were at like 15% of your income, so it was still pretty expensive. And so he wanted to create a new plan, but they didn't have control of Congress. And so he basically did it himself. His old saying, like, I have a pen and piece of paper, right? So he basically came out with this new program called Pay As You Earn. And it was pretty popular among borrowers, obviously, because it dropped payments lower.
Mhm.
And so going into, I believe it was either the presidential election or the midterm in 2014, Congress was basically like, well, we can't have this program be popular, so we're going to pass our own. So they passed. Remember, there's old IBR that was done underneath
Right.
Bush
And that's income-based repayment.
repayment.
Mm-hmm.
And so Congress was like, well, we're going to come out with new income-based repayment, which is exactly the same thing as pay as you earn, like the same thing that President Obama came out with, but this one was passed by Congress. And then about a year after that, President Obama said, well, I want to. It was weird because he came out with another plan, but it was more restrictive than pay as you earn in terms of, especially if you were married. It was called revised pay as you earn. And so those were the plans that we had going into the Trump presidency. And that's what we had the entire time. Nothing changed at all. And then COVID hit and everything got put off forbearance. Then President Biden came in and the Department of Education has been an absolute shit show. But before we go on from there, that's like just the history of how we got to where we're at right now.
Mm-hmm.
I'll dive in deeper on where we're at now, but I'll pause there because I don't feel like, throwing up all at one time. I'll pause there to see if you have any questions or want me to dive deeper or clarify any of that stuff.
Yeah, no, I think that's a really nice history on the student loan, the history of student loans. And, you and I have discussed, I had student loans, but they were much smaller as a physical therapist than what people are graduating with today. And there's a whole host of reasons as to why student loans are so high. It's because of the cost of schooling, et cetera, et cetera. We're not going to dip our toe into that because that is outside of this discussion, right?
Yeah.
So now I'd love for you to dive a little bit deeper into not the history, but where we are, where things stand right now, and what are we looking forward to 2025?
Yeah. So President Biden, they basically had loans on forbearance for 2 or 3 years.
Mm-hmm.
And eventually the courts were like, COVID's over. You're starting repayment. Like you can't keep saying the economy's great, COVID's over in one speech, and then turn around when it comes to student loans saying, well, no, we need to have COVID forbearance still. Like it didn't make sense. So the court said this is over. And so what he did was he put out a new plan called SAVE. I don't even remember what the acronym is for, something about a valuable education or something like that. And it was extremely generous. Like, I mean, it literally would amount to basically post-graduation grants. Like for a lot of people, especially a lot of PTs, a lot of people in healthcare that would have, 150 grand in student loans, most of
Mm-hmm.
them would have only paid like 50 to 100 grand back out of the 150. So, um, they only rolled out part of it in October of last year, and then the last part came out in July of this year. And so the Republicans, or I shouldn't even say the Republicans, because the Republicans didn't sue anybody. It was different states and whatnot. They could not sue until the entire bill was released. So as soon as the whole bill was released, the lawsuit was filed.
Mm-hmm.
Um, and basically a judge put a stop to the entire thing, everything that was rolled out about it. Um, which we've been saying from day one that the only way that it would be not like stopped was somehow like if Biden won a second term and then it was stopped in courts, that they rolled out
Mm-hmm.
another one, and it was just this continuous cycle of rolling
Right.
out new ones and then having it challenged in court and stopped. Because I was just, it's like, this is not, it was so generous. It was like, this doesn't make any sense. How could this be legal? And what the judge said, though, in the meantime, was two really, really big things. One was that the SAVE program was not passed by Congress. It was done the same way pay as you earn, revised pay as you earn, and ICR were done. And so the judge basically, the way I'm not a lawyer, but the way people that I know in the law field are interpreting what he's said so far is that if SAVE is struck down, pay as you earn and ICR are also going to be struck down because they were not passed by Congress. So
Okay.
that was something that I had anticipated, but I didn't know it would go that far.
Hmm.
The other part that was a big eye opener was he was questioning what's going to happen at loan forgiveness because IBR, income-based repayment, is and for new borrowers is the only one that specifically says in the law that you get it forgiven at the end of the 20 years.
Okay.
All the other ones don't say anything. It just says your repayment stops. So the way he was questioning it means there was a balloon payment, not forgiveness, which that portion is still up in the air because we haven't got anything on that, any more insight, and we won't till next year. And so that's where we're at. And I'll go into like the whole Trump component of that too. But again, I'll pause there, see if you have any questions on that, because that's from the court system. That's where we're at right now with the big question marks around student loans.
Yeah. So, what I would love for you to go to explain for maybe people who are watching or who are listening who might not understand what the loan forgiveness program is. I know you had mentioned working at a nonprofit, but what does that look like practically?
So yeah, so there's different types of loan forgiveness. So remember, there's the basic loan forgiveness is one of the income-based repayment plans. So IBR, pay as you earn. What those do is say you're on income-based repayment, it's 20 years long. After you make those 20 years of payments, let's just say you still owed 100 grand. That loan's forgiven, but in the United States, we have a tax law that anytime you have a loan forgiven, you have to claim it as income in that tax year and pay taxes on it.
Okay,
Okay.
so if you had $50,000 left on your loan, you would have to pay taxes on 50,000
As though it was income. So like if
as
you're in a
though it
20
were income.
tax bracket, you got to pay 10 grand in taxes that year. So when we set up financial management and financial planning strategies for people, you're basically saving strategically for taxes as part of your financial plan in that. And so what the judge is basically saying is that that's only spelled out in income-based repayment. Like pay as you earn and old IBR doesn't say that. Like it says if you got 50 grand at the end of the 20th year, you don't have to make any more payments, but you owe the 50 grand, not the $10,000 in taxes. Um,
Wait a second. Say that again.
uh-huh. So,
So and this is for the I income based.
so the only one that says explicitly in law,
Yes.
passed by Congress, that is forgiven and all you owe is taxes is IBR for new borrowers.
Okay, and that's income based repayment
Payment.
for new borrowers, meaning, you went to undergraduate school, let's say you went to PT school, these are your loans. This is the first time you've borrowed from the federal government, and we are going to forgive these loans after 20 years.
That is
And
correct.
that's, I am assuming, contingent on the fact that you have not missed a payment.
That is correct. And
Okay.
that's what's spelled out in the law. You can never be on a defer, like you can't be in default. You have to be on
Mm-hmm.
time payments. That's all spelled out in there. What is happening now with like pay as you earn, because they're talking about allowing people to go back on that now coming up here in December. And ICR, they're saying, look,
And
even
wait,
though
what's ICR again?
income contingent repayment, it was the
In,
very first one that President Clinton rolled out in the
okay.
90s.
Okay.
Basically, what they're saying is if you're on that, yeah, it's over in 25 years, but you don't get it forgiven. You got a balloon payment basically. You gotta pay the whole thing, whatever you owe.
Oh,
Like,
eeks. Yeah.
which is a
Okay.
massive dollar amount. That was a huge monkey wrench in everybody's thoughts.
Yeah. Because
And
I would
so,
think as the borrower, you're like after 20 years, it's done.
yeah, right.
Oh,
No,
that
not
is tricky.
that was the big curveball we got a few weeks ago, and it was just like, oh crap! Like nobody saw that one coming. Uh,
Right.
and so, what public service loan forgiveness is when you're on one of those income driven repayment plans, instead of waiting for 20 or 25 years, if you make 120 payments while you work at a nonprofit, which is 10 years,
Hmm.
the loans are forgiven after 10 years and there's no tax. That is explicitly stated
Okay.
in the law that was passed by Congress. And
Okay.
that's not getting changed. So I know we'll talk about like the Trump presidency and stuff coming up, but at the end of the day, people are like, well, what are we doing? Like, what should I be doing? If I was a borrower, I'd be going on income-based repayment because that's passed by Congress. We know that it's
Hmm.
there. If some of these other things happen to trickle through and pays you earn like is still good and everything's okay there, then maybe go back on that. But for right now, I'm going income-based repayment and just making the payments. And yeah, it might be a little bit higher than what I'm accustomed to, but it's better than the alternatives as of right now.
Right.
That's kind of like the default with where we're at in terms of saying, hey, what should I go on? IBR. And by the way, it's taking the government about 60 to 90 days to process that paperwork. So you can apply, but it's going to take a while.
Got it. Got it. And just so people know, when we say non-for-profits, that could be a hospital, right? So if you're in healthcare,
Hospital.
most
Yeah,
hospitals are
anything.
non-for-profit hospitals. So if you work in that non-for-profit for 10 years, loan is forgiven as long as you've made payments, you've never missed a payment. Your loan
Correct.
is forgiven and you don't pay taxes on it. For
Correct.
income based repayment, you pay for 20 years, you never miss a payment, you have X amount left, and you pay taxes on that X amount. For the ICR, you're
We
in
don't know
trouble.
yet. We don't know yet.
You might be in trouble.
Yeah, and we don't know yet because the lawyer might have just been questioning it, or the judge might
Mm-hmm.
have just been questioning it. That
Yeah,
doesn't mean that he's going to rule and say no, there's no forgiveness here. We don't know. It was just
right.
the way he was questioning it and the comments he was making and the statements he was making. It was like, oh shit, like
Yeah.
that's a
Yikes.
massive one. And
Yeah.
so if you're
Yeah.
on pay as you earn right now, that's just something for the first like 6 months of the year of 2025 you need to be paying attention to because if they turn around and say, yeah, that's not the case, you're gonna have to switch to IVR.
Okay.
So
Okay.
that's something big to keep an eye out on.
Okay, that's eye-opening and incredibly confusing. Now, I have a question
Very
just about
confusing.
loans. So you said now about over 90% of loans are coming from the government, right?
Mhm.
So what happens if people have their loan from the government and they say, "Oh, I want to restructure it," or "I want to change," like what does that even mean? Because I've heard that term thrown around. I'm sure other people who might be listening have heard that term thrown around as well. So you could talk about what does restructuring mean? Because you hear people
Yeah.
talk about it like different entities, like who are trying to help you, quote unquote, help you with your loans will say, "Oh, we'll restructure them for you."
Yeah. Well, that there is, before we talk about the future again, I'll talk about like the current administration because there's irony in all this. So the federal student loans, actually all student loans are non-dischargeable in bankruptcy. And so even private lenders don't have any desire to restructure them because they don't need to.
Mm-hmm.
Restructuring just basically means like if you have a car loan that's 5 years, like a length of 5 years, and all of a sudden you can't make the payment, you might be able to go to the lender and say, look, I can't make this payment right now, but if we restructure this to a 7 year, like I could do that. And they'll
Mm-hmm.
restructure the loan for you. Like that's fine. Because they know that if they don't, you can claim bankruptcy potentially, and then they don't get anything. So they rather work with you.
Sure.
So when it comes to student loans, there's really no incentive to restructure. And the whole bankruptcy thing, a lot of people don't realize this. It was passed a long time ago. I want to say in the 80s. And the irony in all that was the person that was running the finance committee that championed the bill to make it non-bank was to make it bankruptcy remote was President Biden. At the time, it was Senate Biden. He was the one that was basically at the forefront of making that not like bankruptcy remote. Now, what's been happening though is that a number of judges have been trying to say, you know, I they're I call them political judges because it's like they've started discharging some of these things in bankruptcy when it's very clear that they shouldn't be because you have to prove hardship when you go through a bankruptcy and get your loans forgiven. And because of the invent of these income driven repayment plans, it's pretty hard to say I can't afford 10% of my income. And if you're below like 30 or 40 grand in income per year, because they attach what's called a poverty level to your payments are like $0 a month. So
Mm-hmm.
what financial hardship is there? And so you don't see the restructuring and you don't see the bankruptcies because the federal loans are income-based repayment plans. So that you
Mm-hmm.
can't prove hardship. It's very hard to do that. And if you try to say, well, it's because of disability or because of health, there's disability discharges. So if you're disabled, you can get it discharged. So there's no problem there. So it's like, well, what financial hardship can this be causing you essentially? And so that's restructuring, but I don't see that happening. If you're a borrower and you're thinking that you're going to go that route, it's going to be pretty difficult.
Got it. Okay, great. Because so that's a bit of a myth, we might say, right?
Yeah, it's a myth, and you'll hear these stories online every once in a while of
Yeah.
like person got a discharge in bankruptcy. It's like that's one out of 45 million people. I wouldn't really go too much on what that is.
Got it.
So,
Got it. Okay, good to know.
yep.
Very good to know. All right, so let's talk about what may happen. Of course, nobody knows, but what is there anything you can forecast for 2025 and beyond?
Yeah, so we always say in finance, the best predictor of tomorrow is today and yesterday, right? So when I look back at President Trump's first term, student loans are on the least of what they were trying to do. He didn't even care about them. Nothing never came out. And
Mhm.
actually, in one of his budget bills, he had actually come out with a student loan repayment plan that would actually forgive the loans in 12 years. For undergrads, and for graduate school, it would be actually 30 years, which goes in line with what a lot of Congress people say. A lot of people don't realize this, but you have senators actually they talk about it more now. Like Bernie Sanders and Elizabeth Warren talk about this all the time. The way they look at the student loan program is that graduate students subsidize undergrads. All right, so because they know that they have higher income, so they can pay
Mhm.
back the loans, and that's what ends up happening. So that's why he proposed that bill for undergrads being 12 years and then, or 15 years, I'm sorry, and graduates 30 years because they would be able to get votes. Now, did he push it? No, it's just part of his budget thing. It didn't go anywhere. Nobody even talked about it. And so that's what I anticipate from the Trump administration again this year, like for the next 4 years, is they just don't care. Like the whatever the courts say, that's what's going to be there. And I know that there's been a lot of chatter, for example, about the Project 2025 stuff. Like IBR, for example, and public service loan forgiveness, they were passed by Congress. So to basically get rid of them, it's going to take 60 senators to say yes. They're not going
That's
anywhere.
not going to
They're not gonna
happen.
get,
Yeah.
yeah, even within the Republican Party, like this morning, they put out a new bill, the Republican Party did, that would cap interest rates on student loans at 1% and potentially actually increase Pell Grants and whatnot for people. That bill is going nowhere. So if you saw the headlines are all over the place today, at least for me,
Mhm.
because I see this stuff every
You're
day. So I
because you're in it.
shoved in my face all the time, right? But if you've seen those headlines, I wouldn't put much stock into it. But that just goes to show you within even the Republican Party, they're not going to get 50 votes in the Senate to do anything.
Mhm.
Like to get the gut PSLF and all this stuff. That's not going to happen. So I could see a case where IBR is there. The Department of Education, if the rumor's true, they're going to roll out pay as you earn again. And as long as the judge doesn't quote unquote strike it down,
Mhm.
I could see pay as you earn being there again as well. And for the next 4 years, the Trump
Right.
administration doesn't do anything. Like they just say, okay, great. Like those are the repayment plans. Repay. We got other things to do. So,
Right.
that's where we see it happening over the next 4 years. But again, the court system can change a lot of that. So we'll see what
Sure.
happens. And
Sure.
we should get an answer on that stuff in the next 6 months.
Okay. All right. Well, I think that makes a lot of sense. And now you had mentioned briefly in the people who have the pay as you earn, who then finish and have a big balloon payment. Um, so another thing that I know that you do with your clients is you work on financial planning and financial management and different strategies. So what if you are on one of these pay as you earn plans? What kind of financial strategy should you also be implementing?
Well, number one, if you're going on any loan forgiveness, you should always be saving and
Mm-hmm.
preparing for that tax. Um, Traditionally, like we incorporate a Roth IRA to do that just because with the Roth IRA, there's some tax loopholes in there that you can use
Mm-hmm.
and can really, really help out. Um, but the big thing going on right now is I could see a big shift going back to where we were prior to 2020. And what I mean by that is for 3 years, federal student loans had no payments on them.
Because
And
of
then
COVID.
because of COVID. And then
Mm-hmm.
when they rolled back out, you had this SAVE program that was extremely, extremely generous. right? And so what ended up happening was prior to 2020, let's just say you're an OT, SLP, PTO, like PA, whatever. You had this gray area where it's like, do I go on loan forgiveness or do I pay off my loans? And a lot of people needed to make that decision. Well, when Save came out for like another 20, 30, 40% of people, it was like, go on Save. The payment's so low. Why would I do anything
Mm-hmm.
else? Like, this makes
Mm-hmm.
no sense. So all those people are going to be going back on income-based repayment plans. That's going to be the choice, and their payments are going to be back up. And so they have to really look at it and say, does it make sense for me to pursue this, or should I just pay these off? And I'll give you an example. This is one of the biggest mistakes people make. They wait till they have a problem. I have a student loan problem. I need to go get student loan help. I have, a car problem. I need to go get a car loan. I want to
Mm-hmm.
buy a house. I need to find like, so they look at things individually, right? So if I do that with student loans, and let's just say, I'll give you like a rough example. If I make $78,000 a year and have $150,000 in student loans and nothing else is going on in my life,
Mm-hmm.
okay, and I run a simulation saying, should I go on an income driven repayment plan or pay off my loans? It actually comes out to say that you should pay off your loans and then save in the long run, and you would end up with about 200 grand more than if you paid off or went loan forgiveness and tried to save that way. Okay. Now you throw in one life event in there. Say I want to buy a house.
Mm-hmm.
That analysis completely changes. It then makes more sense to go on an income driven repayment plan and buy the house. And if you didn't go through that analysis, you would have made like a four or $500,000 mistake.
Yikes. It's a
And
lot of
so,
money.
yeah, and so I know a lot of people since last October were sweeping this whole student loan thing under the rug because it was like, oh, well, I'm on Save and my payment's $100, $200 a month. Like, who
Mm-hmm.
cares? Like, that's what I'm doing. Well, now that payment's going to go up to like 500 or 600, potentially $700 a month.
Mm-hmm.
And you have a real choice to make in saying, hey, does this make sense or not for me to do? Like, which way do I go based on everything else that's going on in my life?
Yeah, and that's why it's a good idea to seek out people who can help you with that
Mhm.
versus trying to do that on your own. And when, let's say you have to save to pay the taxes, right? How much are the taxes? Is it like 10%, 20%? Does it
It's
depend
all
on what tax bracket you're in?
it's all based on ordinary income tax rates plus your
I
state
see.
tax.
Oh,
So
okay. So
yeah, so
you're
like
paying federal and state taxes on that.
yeah,
Ah,
and there's a handful
okay.
of states that have passed specific laws that say we're waiving this tax. But
Okay.
for example, California, like you would be paying California state income tax as well as federal taxes on that. New York, I'm not
Got
sure.
it.
I'm assuming they're the same as California, but I don't know off the
Probably.
top of my head.
Yeah.
But yeah, so like if you're in a 10% state tax bracket and 20% federal, you're paying about 30% on that money. And so like if you owe 200 grand and that's forgiven, you got to pay 60, which 60 again is better than 200, but
Right.
you still have to
Right.
save for it and be
Yeah.
strategic with how you save for it.
Right. Because saving doesn't mean just put it in a savings account in your bank.
That's correct.
So where would you suggest people save?
Yeah, so this is again why you have to look at everything from a financial management standpoint too. Is like,
Mm-hmm.
what are your other goals? How are you using retirement accounts? So, for example, like we know a lot of new grads that don't maximize their Roth IRAs because they don't know how they work. And with a Roth IRA, it has a special loophole where you can actually take out what you put in anytime you want to. So let's just say over a 20-year span, you put in $100,000, but it's worth 300,000.
Mm-hmm.
You can take the 100 grand out anytime you want to, and you're not penalized. And so we use that loophole a lot to save for that tax because in that example, like if that person owes 60 grand, great. Take out the 60 grand out of your Roth IRA. You still got $240,000 going for your retirement.
Mm-hmm.
Like you're
Right.
good to go.
And you're depending on the market, you're obviously making money instead of the 0.001% that might be in like a savings account somewhere.
That is correct. And at the same time, now you asked me 2 or 3 months ago what I would project is going to happen with that tax. This is what I would tell you. Okay. Um, that tax happens all the time with any loan.
Mm-hmm.
And that was the whole thing during the mortgage crisis that a lot of people didn't realize. It wasn't getting a lot of publicity that when people were getting foreclosed on, that's considered a loan forgiven. So like if you had a $300,000 mortgage and you got it forgiven, yeah, you got foreclosed on, but now you got to claim that as income and pay taxes on it.
Oh, wow.
Yeah,
Okay.
it was brutal. So I believe it was the Bush administration right before he left office. Congress passed a bill to put a moratorium for 2 years on that law for mortgages. Um, President Biden did the same thing when he first came into the office for student loans because they knew that they were going to be forgiving a bunch of them. And so they didn't want that tax because it would have looked really
Hmm.
bad for them. That moratorium ends next year. Now,
Okay.
when you look at there's like something like 8 or 9 million people on these plans right now. The A lot of them started getting on it during the Obama years around 2012 to 2014.
Hmm.
So you're looking at the 2030s where a lot of these are going to be coming due for forgiveness.
Hmm.
And all of a sudden, it's going to be a political issue if all these people have to pay taxes on it. So I could see Congress making a law that says there's no tax on these at all. Where that is at now, it's not going to happen in the next 4 years. I can
Right.
guarantee it.
Right. Right. Right.
Which we never thought it was going to happen before 2030 anyways. It's got to be a problem and cost Congress votes before they actually do anything.
Hmm.
Um, and so we think that that's going to be the case sometime in the 2030s, but you can't bank on that. You got to still save for it as though there's a tax. So
Right. So it's still important to make sure that you're saving, like still plan on paying that tax.
that is correct.
Okay. That
That is
makes
correct.
perfect sense. Okay. So, is there anything that we didn't touch upon yet that you want to make sure the listeners know when it comes to student loans and student loan forgive or student loan payments, et cetera, et cetera?
Yeah, two things. So we talked a lot about loan forgiveness, but it's like, well, what if I'm paying off my loans,
Mm-hmm.
right? So one with private loans, there a lot of them are like 8 or 9%. You should be refinancing those right now. Like we can
Okay.
get down around like 5 or 6%.
Okay.
And even with federal loans, if you're paying them off, a lot of graduates have like 8 or 9% interest rates. Like you can refinance those and keep your lower interest rate loans. A lot of people don't realize that. So now would be a good time to be looking at that. And we anticipate interest rates continuing to drop throughout 2025. So if you're going to refinance, that doesn't mean, oh, well, I'll wait for it to drop because it might not drop even more. So
Right.
with student loan refinancing, it's free. So it's like if you can, in December, January refinance and it makes sense for you to do it. And then it's like, okay, well, 6 months down the road, if their interest rates drop again, do it again. Like it doesn't cost you.
Oh, you can, it's not like a one and done. You can do it.
You can refinance as many
Ah,
times as you want to. And like I
oh,
said, it's free with student
okay.
loans. That's one of the biggest things that we do is help people shop those rates to make sure that they're making the right decision. And that's why, I mean, there's people that we've had on our platform that refinance 3, 4, 5 times.
Oh,
Um,
okay.
that also applies too, that if you have car loans or mortgages, like keep an eye out because interest rates should be dropping throughout the year.
Mm-hmm.
The difference though between like auto loans and mortgages is that there's a cost to do them. So you have to weigh the benefit of the lower interest rate versus the cost.
Mm-hmm.
But definitely next year, just from a financial management standpoint, keep an eye out on interest rates because it may be a good time for a lot of people that had to get a loan over the last year or two to get into a lower interest rate as they
Mm-hmm.
drop. I just recorded a housing update for 2025 with one of our mortgage partners. It's coming out next week. But like in that, they're predicting that interest rates on mortgages is going to drop about 1%. So, we'll see. A lot can change, right? We have a lot of
Mm-hmm.
geopolitical type of things going on right now with,
Mm-hmm.
different things just across the world. So things can change overnight. But looking where they're at now, it looks like rates are going to be dropping. So keep an eye out for that.
Okay. All right. So refinance if you can. It's free for student loans. That's a great tip. You can do it again and again. I feel like I'm learning so much because I'm not in the student loan world anymore. Well, this was great. Is what would you like the listeners to take away from our conversation today?
Yeah, one, don't get scared about student loans. A lot of the headlines are coming out right now, like a lot of clickbait stuff, like, the world's going to end, because, new administration's coming in. A lot of it's just that, it's just clickbait. Like, don't I wouldn't stress too much about it. Like I said, if you want to go on loan forgiveness and you're there right now, switch to IBR. You know it's going to be there. It's not going anywhere.
Mm-hmm.
But the big picture, really focus on financial management. How does all this stuff play a role into the bigger picture? So that way you can make sure that you're doing the right thing with everything, that student loan should be complementing everything else that you're trying to
Mm-hmm.
do. And then, like I said, even with investments, I brought up the stuff about the interest rates. Like, are your investments positioned to take advantage of that as well? Like, those are all things that you should be looking at going into 2025. So, we can go from there.
Great. Well, it's a lot to think about. Now, where can people find you if they want to work with you? They have questions. Where could they go?
Yeah, FitBux.com. Those of you that don't know us, I know it's been like 2 years since I've been on your show. But when I was in wealth management, those of you that I don't know, financial planning, it costs like 2 to 4 grand, sometimes 6 grand to pay a financial planner. They're very limited on what they can do just because there's so many moving pieces.
Mm-hmm.
How do you put it all together without technology behind you? So I created an algorithm that puts everything together. And so when you're building out a financial plan, you can see exactly what's going to happen and not try to guess that you're doing the right thing, but know. And because it's all technology based, basically what takes a financial planner about 40 hours a year to do, we can do it in about an hour a year. And so instead of having to charge like 4 grand, we charge $189 a year. So um, and it's cancelable anytime. So, like,
Right.
suddenly 6 months from now, you don't want to pay it, and you just cancel it. So, but yeah, it's fitbucks.com. If you guys want to just, keep up on some of the new stuff, we do have the YouTube channel. That's what we've been putting stuff out on a
Mm-hmm.
lot. That and the podcast. It's just at FitBucks on YouTube. And of course, I'll be coming on hopefully with Karen
Yes, of
hopefully
course.
quarterly or once every 6 months to just
Yeah.
give out like a financial update just on where things are at in like real estate markets and investment
Perfect.
world and all that fun stuff. So
Perfect, perfect. And if you're listening to the podcast right now, whatever platform you're listening on, we'll have all the links below, so you can click on those links and find out more about FitBucks. And if you have any questions, you can contact them there. So, last question I ask everyone. I've asked you this before, so you just have to keep coming up with new things, I guess. So,
uh,
what advice would you give to your 20-year-old self?
it changes every day.
Perfect. Since you've been on so many times, we've got a lot to work with.
Um, we preach a lot when we build out financial plans. We break it into three categories where your money goes. The second category is money for future self. And the trick with your finances is making sure you're increasing how much money you're doing to that category over time and do it as frequent as possible. And if you do that, you will be in an extremely good situation, down the road. And so I learned that when I was probably like 28. So had I been 20 and I'd known that, it would have been a lot different, like different story. So keep it simple and just remember if there's one thing I'm trying to do, money for future self, which is like short-term savings, retirement, and debt.
Mm-hmm.
If I'm putting $1,000 a month towards that right now, my next goal is to get that to $1,100 a month. How fast and how soon can I do that? And if you just focus on that, you're going to be in a really good spot in the long run.
Perfect. Well, Joe, thank you so much for coming on once again.
Yeah.
And thank you. Thank you. And everyone, thanks so much for tuning in. Thanks so much for listening. Have a great couple of days and stay healthy, wealthy, and smart.